I'm trying to see where is the countdown.
Yes, started.
Okay. Okay. So, good afternoon, good morning, good evening, wherever you are in the world. It is fantastic to have so many of you listening to the brand called You for an amazing discussion with one of the very well known and well respected investors, a friend who I've known for a long time, managing partner of Caret Capital. Prajakt, welcome to this
Thank
conversation.
you very much. What a pleasure it is to be on this show with you.
Thank you. So, Prajakt, we had said in our conversation, there's always a challenge for a lot of startup founders when they start their business, found their company, and as always, most people don't think about where will they get the money from. And money, as you would agree, is the oxygen needed to keep building a business. And yet, there are always challenges of rolling out a company, rolling out a business, rolling out an idea, bringing it to market, and building a team, etc., etc., etc. So I've got a few questions, and I'm hoping that our viewers and our listeners will have many, many more questions for you. My first question to you, Prajakt, is what are the top three things investors look for in a startup when it is at the idea stage? But before that, I would also like you to tell us a little bit about Caret Capital and the companies that you normally fund.
Sure. Ashutosh, and before I answer the question, I'll also contextualize the question in terms of why do investors look for what they look for in the companies that they typically invest in. But before I begin, Caret Capital is a early stage venture capital fund. We invest in three specific sectors that we believe are integral to the India growth story. One is about supply chain optimization and distribution optimization. We believe that that's an important component if India has to be a level player or a good player, strong player in the global field. The second is employment and employability, which we believe is extremely important for the country if our development has to be very healthy. And the third, all of this development needs to be underpinned with sustainability. So anything that transitions to smart mobility, etc., are the three themes. So supply chain optimization, creation of 10 million jobs through employment, employability, and smart mobility. These are the three things, three sectors that we invest in. And we believe that these are three interconnected ones and very integral to the India growth story. Of course, there are many other sectors as well that one could look at, but these are the three that we typically look at. Our typical ticket size in our fund would be about 12 to 15 crores, which is about roughly $2 million for folks who are from overseas. And we typically do that in about two installments. We are happy to lead a round. We are happy to be a co-investor, and we are also happy to be the only investor in companies, depending on how they are. But I think what would also be relevant for a lot of listeners listening today is that we also run an accelerator program. What that means is that we engage with companies that are at a very, very early stage, and we provide them, in addition to small amounts of capital, we provide them with a lot of handholding and mentoring that will help them build a stronger foundation for them. So that's Caret Capital.
Okay. And therefore, when an investor or when a founder is looking for money at, as you said, Caret Capital is an early stage fund, what are the top three things you look for when a startup is at the idea stage?
So let me, as I said, let me contextualize that question. What are the three things investors look for? Entrepreneurs have to understand how the business of investors work. Now, what do investors do? Money by buying shares else at a significantly higher price than what you had bought it at. And that fundamentally is the way the investor model works. And therefore, all the three things or the three critical things that I will tell you that investors typically would look for in companies that they invest in are all designed to give them the answer. Is this a company on which the shares that I have bought I can sell it at a significantly higher price. And
Mm-hmm.
so therefore, the primary question would be, is
Mm-hmm.
this is this concept or is this product addressing a market which is extremely large, which means is there significant headroom for the product or the business to grow if the company and the product does well in that market. The second, of course, has to be with unit economics. Is there a strong business case that is underpinning this, the business model or the concept of the product that the entrepreneur has got in? And the third would be, is there something that is in the product or the service or the concept that is a moat and that will give a reasonable chance of this company becoming a dominant player in that market because something that is unique in the product or the approach or the business model or any aspect about the various things that underpin a business. Now, there are several factors that will come to play. These are, of course, the top ones to even consider whether the investor would want to meet the team and engage further. But if some of these are saying, okay, it's a great product, it looks like a great market, and I think there will be a strong business case, there will be several other factors that will determine whether the investor will write the check or not write a check. And that would largely be about, is this the kind of team that I would want to bet on? Does this team is this team in it because of the conviction and the interest and the passion for what they're doing, or are they in it because this is an opportunistic thing and right now this seems to be the flavor of the season? Does this team understand the business around the product rather than just saying that, oh, look what a lovely product that we got? Do they understand the business around the product? I think some of these will be the more other aspects that will come into play
Correct.
before somebody writes a check.
Very, very interesting. Thank you. The other aspect that I wanted to get your thoughts on was that there is this uh, constant debate on bootstrapping versus fundraising. There are lots of advantages of bootstrapping. You don't get diluted. You keep a very tight run operations, but then you may not have enough money to be able to do the business that you want to do. At what stage should a founder start thinking about fundraising, and how early is too early?
Ashutosh, to the question of, whether you should bootstrap or raise capital, I think one thing that I've realized in several years of experience is that everything in life will have its pros and cons, and
Correct.
you need to weigh those pros and cons in the context of your life.
Mm,
By and large, the longer the later you take capital, that much more stronger your business will be because you will have the ability to have a lot more equity, which allows you to raise far more larger amounts of capital without significant dilution later on. But everybody's life circumstances and context would be different, which means that, say, for example, if I have a great idea and I have the money, say, for example, to plow, for and try different aspects for the next 1.5, 2 years or so, I
mm,
would recommend that you do not take external capital and you then bootstrap because it allows you to do the experiments in the way that you want. You can
mm,
stay focused in the way you do it, and then once that model is proven, you go out and raise capital, which means that you will be able to raise it at a significantly higher valuation because some of
mm.
the risks have been taken off the table.
Very well
But
said.
it is quite possible that you have a great idea, you have a great concept, you're the apt team or the person to really implement that concept, but you don't have the money to pay to
Mm,
take that to market. Nothing wrong, and therefore, at whatever stage, even if it is at a concept stage, hitting the market and trying to raise capital on the
mm,
basis of some of the fundamental things that investors would look for. Now, the question is not therefore in terms of what stage you should go. You should go whenever you feel that there is a need that you need external capital. At that point, you should go. But the
mm,
question really is, whom should you go for raising the capital?
mm,
If it is at the concept stage, it
mm,
is unlikely that institutional investors, which is venture capital funds or the early stage venture capital funds, or even angel networks, will
mm,
put money into to really get it off the ground. But there are incubators, there are accelerators. These are some formal mechanisms through which you can, apply for early stage funding. There could be government grants, or there could be another one which is called angel rounds, which is taking small ticket investments from a number of your family and friends. So, for example, if somebody needs, say, 20 lakhs to saying that, okay, I've got a concept, I need 20 lakhs to build a prototype and test it with a few customers. It's
Mm,
going to take me about 6 months to do it. It might be hard for you to find one investor to put in 20 lakhs, but it
mm,
is quite possible for a lot of people to say, look, I can find 20 people who will be willing to put a lakh each in two
mm.
installments of 50,000 rupees because I
Right.
don't need all that money right now. So there
Yeah.
are different ways in which you will be able to, sort of create the or raise the capital that you might need for the business. Uh, uh, in You just need to understand what stage you are at, and therefore what kind of investor would be relevant for you.
Mm,
If once you go beyond that stage and say, for example, you've got a prototype going, you've got early in market evidence that this seems to be working, the product is right, the customer seems to be liking it, they're paying for it, and so on and so forth. At that point of time, you could also go to angel investor networks and raise a slightly larger round, which could be anywhere from say a crore to 2-3 crores or so.
mm,
Or you could go to early stage VCs and stuff, and then the entire, sort of the entire ecosystem of variety of stakeholders or different kinds of players is
mm.
available to you.
Very interesting. And you and your team must be seeing a lot of pitches coming to you from first time founders. uh, for all the people who are listening to us right now, what in your view are some of the common mistakes first time founders make when they are making a pitch to investors?
Yeah, the first mistake that especially early stage founders make is they talk a lot about their product.
Hmm.
Investors invest in a business, they don't invest in a product. A product is a good starting point, and a good product is a great starting point, but it is not a sufficient condition for business. It is an important condition, it is a necessary condition, but it is not a sufficient condition for a business to be successful.
Right.
Now, what that means is that you may have a great product, but unless you know how you're going to build a business around it,
Hmm.
unless you know how you're going to make it, manufacture it, or take it across to customers or to service customers with it, and what are the numbers that will underpin it, what is the cost of delivering that, how do you manage customer support, what is the GTM, what is the branding, what is the positioning, and all the various aspects about business that you will experience
Hmm.
when you take that product to that market. If you don't have at least a basic understanding of that, it will be very hard for you to build a business. Now,
Hmm.
what happens is because investors get lots of pitches. By the way, uh, and at least that's the way we think, and I know several investor friends who think of it about it in that same way. While an entrepreneur is coming to an investor to ask for money or
Hmm.
to get capital, an entrepreneur is a customer of the venture capital fund.
Okay.
And much like any customer that comes to you, you will treat them with as much respect, or you will, sort of assess whether this is the right customer for you. Whether we get 1,000 applications or whether we get 1,000, every single application gets looked at. Many applications get rejected at the first end because there is no practical way in which you can look at 2,000 applications and meet 2,000 people in detail. Now, therefore, when if you have to increase your chances of getting a meeting after the deck has been sent, etc., the way to do it is to not only talk about the product and the potential of that product and contextualize and help people understand why that product will have a significant market potential, but it is also important for you to help the investor understand that you understand the dynamics of the business behind it.
Hmm.
Now, one could debate and say, look, I don't agree with the unit economics. I don't agree with the pricing. I don't agree with the CAC, which is a customer acquisition cost. I don't agree with what your projections are. All of these are different perspectives. But if I don't have it in that deck, it is fair to assume whether this team really understands what it takes to build a business versus doing it. So even if it is preliminary or rudimentary, sort of calculations, put in things that give a clue saying that we understand the business around the product.
Hmm. Amazing. My next question is, how can a founder validate their idea before seeking investment? And what kind of traction or proof points are ideal?
I didn't hear the question in full, but I think I understand what the question would be.
I'll repeat it for you. How
Um,
can a founder validate their idea before seeking an investment, and what kind of traction or proof points are ideal?
So it depends in terms of what stage you are at. If you are at a concept stage, then the only way you can validate the idea is talking to several customers and getting their feedback that this concept or the product that you propose to bring that market
Mm,
is indeed something that they will value and that they will be willing to pay for. A lot of therefore customer interactions is extremely important. But if you have a prototype, then the way to validate the product would be that a certain set of customers have played around with that prototype and they feel that this is something that they will buy. If you have an early pilot, which is a market-ready product, rudimentary as it may be, or a solution, then the only proof point or the validation would be in terms of a certain set of customers buying it, using it, and sort of uh, there is depth of adoption and there is depth of
mm,
traction in businesses that would have repeat purchase, there is repeat purchase, and so on and so forth. So all of these would be indicators of that your concept seems to be finding what in investor terms or startup terms is called
mm,
product market fit.
mm,
But talking to the customer and getting their feedback firsthand, whether it is at proof of, at idea stage or whether it is a ready product stage, there is no other substitute
mm, mm.
to that. Sorry,
Very good.
what was the second part of your question,
No, and as a,
Ashutosh?
what kind of traction of proof points would be ideal?
Yeah, I mean, different kinds of things for different businesses. Often, okay, let me explain with a couple of examples.
Mm,
If you're, if you're selling something which will be used 10 times by a customer in, say, for example, a month,
mm,
and you say, "Okay, look, I in the first month I launched and I got 1,000 customers, but on second step it's like, oh, very good. How many of these people, brought you for the second time? Oh, out of the 1,000, 80. Now
mm,
suddenly that's a very big number in terms of, oh my God, what happened? I mean, they wanted the product, but obviously they did not find enough value in the product to be
mm,
able to buy it the second time.
mm,
So whether you want to have a large number of people testing it and proving that they have a value or a need for the product, or you want to prove that not only is there a need for the product, but there is adequate value in the product for people to go out and test it again. For
mm,
example, if there is an ERP solution any kind of SaaS solution that you give it to customers,
mm,
assuming that customers, say for example, a customer has say 5 offices, and you give some product and saying that, oh, it is being used in that office. Okay, how is it being used? Oh, it's very nice, very nice. But why haven't the four of their other offices using it? Oh, they haven't really, they haven't had the
mm.
time to really, experiment
Yeah.
with it. What that tells you is that there was interest in the value proposition. The
Mm,
first, touch point of the client, because they implemented it, they seem to be using it, but there
mm,
was not enough value that they saw to recommend it to their colleagues in the other offices, as a result of which uh, adoption seems to be a bit of a problem. So the short answer to that question is, what traction is relevant? You will need to figure out what is the relevant matrix for you to measure. But
very
it will be a factor of number of people and how well they are using it.
well said. And my next question, Project, is how important is the team uh, versus the product when making an investor decision?
Yeah. So there is a saying in the investor world that it's better to bet on an A quality team with a B quality product than
Mm,
a B quality team with an A quality product, because a good team will make a moderate product also successful in the marketplace.
mm,
A team that does not have what it takes to really succeed will not be able to do much with a quality product as well.
mm,
Uh, at the end of the day, execution is going to be everything, because there is so much of unpredictability and you're dealing with a whole bunch of variables that are changing every day, that
mm,
unless there is a team that has the leadership qualities that will attract a bunch of people with lower salaries, with unpredictable futures, etc., and excite them with the passion, enthusiasm, they won't be able to put the team
mm,
in place. Even if they're able to excite the team, if they don't have the operational discipline to be able to execute it, they won't be able to take the product to that market. And if
mm,
they don't have what it takes to really build solid foundation for the business. Even if they are able to get into the pilot stage, they won't be able to scale that up with the right kind of processes, etc., that is required.
Mm.
And going back to the first question, that the only way investors make money is that if they are able to sell it at a significantly higher valuation than what they had bought the shares at, unless a business scales up, while the business can sustain at a slower pace and at a lower volume, and the entrepreneurs could keep on getting money through salaries and other things, an investor will not be able to make money unless he or she is able to sell the shares, and therefore
Mm.
scale is extremely important.
Yeah.
So while the product is an important one, having the right team, especially at the early stages, that will demonstrate their ability to really execute in the market.
Mm.
Uh, if investors don't get that confidence, it'll be very hard to raise the money. And
Very.
one of the things, therefore, I tell entrepreneurs is that when you are making a pitch, it is not necessary that the CEO who's or the lead founder among, say, for example, three, is the one who's making the presentation.
Mm.
Put your best foot forward. Make
Mm.
the person who's the best presenter, who can tell the story well, who can communicate the nuances of the concept well, to really lead the pitch. Because
Mm.
every person will have different skill sets. If I'm not a great presenter, I need not be the one who's presenting.
Mm.
But it is important to also demonstrate that all the three or four or two, whatever co-founders are play an important role, and therefore pitch in at whatever time where you're
Mm.
where an aspect that is related to your area of expertise
Mm.
comes about.
Very interesting. The other perspective I wanted to get from you was on valuation. Every founder believes they have a product or an idea which will become either a unicorn or is a unicorn in the making. How should founders approach valuation in the early stages, especially when their revenues are limited?
And it could be a situation where revenues are zero as well, but there could be valuation is a factor of several set of variables that when stacked together, somebody is able to assess some at the end of the day. Valuation is a game of pricing risk, right?
Correct.
So if, say, for example, there is a D2C brand idea that has been brought in by a 20-year-old kid, nothing wrong with it, exciting idea, great one, etc. But because he or she does not have the ability to or an experience of running a business, the valuation that they will get could be very different or will be very different than, say, somebody who's be the vice president of a business unit in a 500 crore company and has successfully launched a D2C brand.
Mm.
So it's not just the product or the potential, but it is also about the team and who they are, where they are that
Mm.
that would determine. And the range could be immense. So there is no science or art that can say that at early stages this is the right kind of valuation.
Mm.
But by and large, if one were to look at, say, for example, a benchmark, no matter how much money you are raising, you will end up diluting in every round anywhere between 15 to 25%. You could sometimes it could be 10 to 30, 35 and
Mm.
so, but by and large it will fit into the 15, 20,
Mm.
25 kind of a range. And therefore, sometimes entrepreneurs in these kinds of Q&A sessions ask me, but look, if I raise 50 lakhs, I'm going to dilute 20%. Even if I raise 5 crores, it is going to dilute 20%. So why should I not raise more? Oh,
Mm.
you can, provided it is available. At the end of the day, somebody is pricing the risk in their mind as well. Uh, if there is a raw concept, which I believe has the legs, and I believe that this team has the potential to really, sort of take this out, but it is completely uncharted and unproven territory, and these are first-time founders. I
Mm.
might be okay to take a 50 lakh, 75 lakh risk from my accelerator, but not a 5 crore risk from the fund
Mm.
to see whether there is merit. I may invest from the fund a follow-on investment, but that's the way the game is played. But
Mm.
sure, I mean, if they are able to find 50 lakhs, if they're able to find somebody else who's willing to invest 5 crores in that for the same valuation, why not?
Mm.
At the end of
Mm.
the day, it is a function of how somebody else perceives the risk and therefore is willing to price it.
Mm. Amazing. So I have time for two more questions. Project, what role does storytelling play for a successful fundraise? And can you share an example where a great story made the difference? And I don't want any names, of course.
Yeah, I cannot underscore the importance of a great storytelling. At the end of the day, because investors see so many pitches, so many
Mm,
presentations, whether it is in person or decks coming in, then that
mm,
storytelling, whether it comes across through a deck or a mail that you have sent across, or when you're presenting in person, your ability to tell the story and really grasp the attention and get people's attention and say, "Oh my God, what a fantastic product and what a great team! I really like them." That's it.
mm,
So the objective of any presentation is to
mm,
get a meeting. People assume that I should throw in all the data, all the nuances, all the information, so that I'm able to get a check. Nobody's going to get a check even if they love what you do in the first meeting. So when you look at it and see
mm.
that what is my object, the objective is to wow this audience and tell them that this is worth spending, this is a team worth spending time on, and they should call me for a next meeting, which is where I can get into the details. But sometimes, and one of the things I tell entrepreneurs is to really practice what
Mm.
their product is in one line, in a way
Right.
it describes it. And a lot of times, entrepreneurs go on to create very creative lines which don't describe the product well. So you asked me for an example. Let me give you two examples. One a bad one, one and a good one. Okay.
Mm.
So assume somebody is doing something phenomenally interesting in the healthcare space. Okay? Instead of saying we are redefining healthcare, which means nothing. I could keep on imagining what that means. I mean, are you creating this or that? And it could be anything in between.
Yeah.
But it is because communication is not a test of creativity, it is a test of clarity of communication.
Mm.
And therefore, if you were to, instead of saying I'm redefining healthcare, if you were to say I'm creating a chain of low cost pediatric clinics in tier 2 cities in India.
Mm.
It is not a creative set of words by any means, but it is extremely clear without any ambiguity. Any person will tell you what these guys are doing.
Yeah.
And I think that's very important.
Mm.
But sometimes how you do it creatively is also very important. I still remember about 7 or 8 or maybe even 10 years ago, there was an entrepreneur who had come in who was supplying a variety of things to hotels.
Mm.
Okay, these tier two and I mean the um, uh, 2 star, 3 star hotels, they're supplying a variety of things. And
Mm.
the way they explained the business was, he said, if you take a hotel and turn it upside down, everything that falls, we supply.
I
Now,
see.
it was just a
Amazing.
visually stunning way of explaining the business that I still remember it. And there are several presentations that I remember it for something or the other, whether either the founder created a very interesting situation and then narrated the story, or they came up with some samples or something like that, which made you remember that. So much like if say for example 10 people were, it's like a elocution competition in school. There are 10 students who are going to narrate their story or their essay or whatever that is.
Mm.
But the one you remember is the one that was remembered for great storytelling, not necessarily
Mm.
because it was the
Correct.
best story.
Correct. Correct.
And that's
Amazing.
exactly how it would happen with a pitch presentation as well.
Fantastic. And my last question for your project. Given the current investment climate in 2025, what sectors or startup trends are you and possibly other investors most excited about?
I think, and let's talk for India, for example. India is in an extremely opportune position at this point of time. We are
Mm.
a 4 trillion economy right now, poised to become a 10 trillion economy in whatever 7, 8, 10 years time. Whatever, I mean, whose ever projections that you look at, they will be within that 7 to 12 years will become a 10 trillion in economy.
Mm.
Fundamentally, a number of things will need to change once that happens.
Mm.
For example, our rural markets, which currently are about less than $1 trillion, will become a $4 trillion. Just imagine a market expanding 4x in
Mm.
about 8 to 10 to 12 years.
Yeah.
Our exports will have to grow significantly. Our manufacturing sector will have to become a lot more competitive.
Mm.
Our supply chain and logistics will need to be a lot more efficient. Our
Mm.
customer support and services will need to be a lot more uh, 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 predictable and of good quality. Our
Yeah.
designing skills will need to improve. Um, uh, today, for example, a lot of people from rural areas are migrating to urban areas. They will need to, hopefully, we will be able to create good employment opportunities for them, therefore, remote work and stuff.
Mm.
The point I'm saying this is that the way to think about what sectors will be important is to look at what are the macro trends that are going to have a lot of tailwinds,
Mm.
and what will need to change for those macro trends to really play out well. For
Mm.
example, if you say that our rural markets will be 4x, then a whole bunch of ideas around rural distribution, creating rural infrastructure, creating capacity for consumption, etc. All of these would be the sectors that would be very good.
Mm. Mm.
Now, what happens is that there are different kinds of investors. Some investors are thematic. We are born thematic in the sense we've defined certain themes on which we will and therefore we will have our views already defined on what the opportunity areas are, and therefore we will invest in them. But then there are a whole bunch of investors who are what we call sector agnostic investors.
Mm.
And for a lot of those people, because they and there are pros and cons to both. There are pros of investing in, say, a thematic one because we can go deep dive, we can bring in domain expertise on a whole bunch of things.
Mm.
It's very hard as well because unless you have that domain expertise, you can't be a thematic one. But by and
Mm.
large, if you do that, returns are larger. But on the sector agnostic one, it is important for us to then help the investor understand why your concept of investing in that particular sector is because of which you believe to succeed in that market.
Hmm. I think I lost you suddenly in the last bit. Uh, we've lost Prajakt, but in any case, I think we've come to the end of our conversation.
I could
There
hear
you
you,
go.
Ashutosh.
Okay, I
I
suddenly
I could
lost you.
hear you.
So you were telling me that last one I heard up to was that many people are sector agnostic, and after that I lost you.
Yes. Investors, typically, and as the name suggests, they will invest in any sector that they feel will have the potential in. But because they are
Mm.
not sector specialists in that, it is
Mm.
extremely important for entrepreneurs to therefore help them understand why
Mm.
entrepreneurs believe that the concept that they have has strong tailwinds and help them
Mm.
understand therefore the potential of that market.
Interesting. Very
But
interesting.
in answer to your question in terms of what sectors will be hot in India in
Mm.
the investment scenario, the short answer to that is anything that is powering the India growth story, I
Mm.
think will have a tremendous amount of appetite, not just from the market, but from investors as well.
Mm. Amazing. Project, and on that note, I just want to say what an amazing conversation this has been. I mean, those of you who have watched it will must have learned many things. Those of you who were not able to log in will, I'm sure, be able to see the recording of this conversation on YouTube. Project, thank you so much for sharing your wisdom, for sharing all your learnings with so many of our viewers and listeners on the brand called you. I think Caret Capital is doing some great stuff, making some amazing investments, and all the very best to you, the entire Caret Capital team, to continue to just go from one strength to another. Thank you again.
Thank you very much, Ashutosh, and always a pleasure to be talking to you and on the platform brand called you.
Thank you.
Bye, everyone.